Gentlemen, welcome to the Foundation for the Study of Cycles. My name is Lars Fontin. You are watching Cycles TV. We are doing this every week on Monday to review current action in the markets and have a look at cycle analysis. We need to talk. Today we have the 24th of January. If you are live here today, I think you will have an eye on the markets in parallel today. What a crazy action there. But we don't get nervous here. And in regards to cycles, there couldn't be any better education as the live behavior of the markets and what we did here live together with you during the past 3 months. So that's the focus for today, because we just need to recap what we analyzed here from September, October to November, where it was always a clear message that we would expect the markets to drop end of last year, beginning this year. So therefore, today, let's drop into the session. Today, it's about the big picture. It's about why, as a cycle analyst, we are not surprised what currently happens in the markets. And you have seen this unfolding here live on this channel. So let's recap what happened. I will start with the first analysis we did here in September. In September, we discussed cycles in the Baltic-Dry-Index. This was in September, and I will get back to it in a second. And the Baltic-Dry-Index is a leading economic indicator. So it will turn right in advance, right before you see anything in the global markets. And I talked about a very dominant cycle in the Baltic-Dry-Index, and we had confirmation of that. So, and you can be very relaxed in doing this, because this is a leading indicator. And if you see a leading indicator react to cycles, you could anticipate what happens next in the markets. So this was September. So then let's continue. In October, we talked about weekly cycles, a long-term weekly cycle analysis. I think 20 years or even more of weekly data, and 3 dominant cycles have come into alignment, and they shifted in October. So this and did a very long-term projection with a major change in cycles. A second very important cycle analysis, which on top of the first one is very interesting, because the Baltic-Dry-Index, you see what happened there. Then we had a weekly forecast in the major markets. And then this was also the October-November period. We took a look at the financial stress index. It's a completely different measurement. So we do not take the price action and do cycle analysis. We analyzed financial stress, so which is in general measured by the Federal Reserve Bank of St. Louis and is publishing this raw data. But this raw data is very hard to read. But as we're talking about financial stress, which is a kind of sentiment in the markets, and cycle analysis is great on sentiment data. And this analysis, we did this year also, end of October, beginning November. And I will just review it with you. It did a clear message. No 2 or 3 outcomes or no cover your ass outcome here. This was also a clear message that the financial stress is expected to turn at the end of 2021. You have seen this in October already. And I repeated this year in December, and even on the 10th of January, I repeated this. Then we had a look on the daily cycles. The daily cycles then is a different time frame than the longer time frames here. So now we took a look at the shorter time frames, in this case the daily, and we've seen that the daily cycles have come into sync end of December. And this is the point you always look for, end of December, where markets still have moved up, or at least have been in a sideways phase since November this year. The daily cycles also showed the top here, and we did this here live. So this is really nothing I want to pick here to show you how great it could have been in after the fact. This is everything before the fact. And I repeat this because it's the best example you can learn about cycle analysis with having an eye on the real markets, what happened there. And the last 4 months is a picture perfect learning example how cycle analysis works. And I will review these 4 topics in a second with you for learning, because the pattern which we have reviewed here during the last 3 months repeats in every main market on any time frame, even on lower time frame. So therefore, if you understand what happened here, and this is live, not cherry-picked, what happened here, you can see this, or you should watch out for these patterns to happen on hourly cycles, on other time frames, and other measurements. And then you get a confirmation when to follow cycles and when not to follow cycles, because this is often something I want to talk about here, what you should never do. And especially if you are new to cycle analysis, never just open a chart, which you could do with the cycle analyzer, make a click and switch the cycle analysis on, then just do one projection and then think about, okay, now I see this projection, this needs to happen. Often, if you just use these singular analysis on cycles, it will fail. And you might lose the attention on cycles, which is a pain, because you need to look out for cycles within cycles. And you need to have a kind of understanding of the rhythm of the data set you're analyzing. So you need to know how cycles behaved in the past on the data set you are looking for. And this gives you confirmation about which cycles you should use in your forecasting approach. Because if you know from the past on this market, and not just on statistical analysis, if these cycles played out in projection, so it's a kind of walk forward analysis you are doing. So you know from the past that these cycles have been useful in advance in your projection. So these kind of walk forward analysis, then you get more trust in these cycles. And then you need to align long-term time frames, which is we are doing here with the weekly and the daily, and different correlated data sets. So the Baltic-Dry-Index is a leading measurement for the main markets. The financial stress index is a related data set to main markets, but it's not the price data. And then the weekly cycle. And this is the combination you need to look out. So if you're analyzing cryptocurrencies, you should ask yourself, okay, what is a correlated long-term indicator for cryptos? If you're not doing just the raw analysis on the price alone, what is the kind of sentiment data for the price? What is the shorter and longer time frames you want to align? And then be patient, because you need to wait for the situations when the long-term cycles, the short-term cycles, and then these, in this case, we have 3 different data sets: the raw price, weekly, daily, the Baltic-Dry-Index, leading indicator, and sentiment stress. When all these different kind of cycles come into alignment, then is the time to act. And as a cycle analysis, you will see this in advance. So you know no requirement to get hectic or to get trapped or to get into panic mode. Nothing. That's the beauty of cycles. We see all this happen in advance. We just need to be patient. Often, and I've also fallen into this trap, I just see one cycle in a chart and then maybe you want to trade. You really want to trade because you're sitting in front of your screen and you say, I want to get something out of it. You should not trade because you want to trade. You need to wait until long-term, short-term, and 1 or 2 different data sets come into alignment on your cycle analysis. Okay, so now this procedure, and I will review now these 4 topics here just in short, because if you're new or if you have not watched, this is not about how great this forecast is or was. This is about how cycle analysis works. And there couldn't be any better example as what happened today in the markets during the last weeks. So let's get just a quick overview. And at the end of the session, please drop in your questions. I'm live here today, so I will take a look at your questions at the end of the session. That's why we are here. We want to build this community. And I will make a short side note about Bitcoin at the end of the session. Okay, so stay tuned also in regards to that. Quick recap, and then please take your time to review these analyses. Let's get back to the Baltic-Dry-Index back in September. I just need to switch screens here for a moment. And I think you see the links down below in the video section, so you can take your time on your own in a second. So this was the live analysis on the Baltic-Dry-Index we did here in September this year. So I really point out because we did this live in advance, just that you don't think I'm just picking something after the fact which might look good. And if you see why this analysis here, you can watch the video on your own. The Baltic-Dry-Index has really gone into a very extreme upwards move here, and it really peaked at that point in time. And I did a cycle analysis on the Baltic-Dry-Index with you here, which you can directly see on the chart, which at this point in time here, it looked like the Baltic-Dry-Index will peak, and there was a very, very long-term uptrend in the Baltic-Dry-Index. So this cycle was not easy to see. After the fact, this is what happened in the Baltic-Dry-Index. So, I mean, this was the point in time here where we did the projection, and this is just live from the cycle analysis. We should look out for the Baltic-Dry-Index to turn based on the cycle here. And it's not just a turn, it's really more or less a crash in the Baltic-Dry-Index. It lost over 60% have been lost in the Baltic-Dry-Index. This was forecasted here. I mean, you could argue at the point in the time, why was this important? I can't trade the Baltic-Dry-Index here alone. So what's the use of this kind of forecast here? So first, the Baltic-Dry-Index is a very leading indicator in regards to what you should expect from the economics into the future. So it's a measurement of ocean freight shipping rates. And if the economy will slow down, you will first observe this if the global shipping rates or freight rates collapse or go down. So we have not known in September that this will happen, but cycle showed us. But then in October and November, so we had the confirmation that this really took place. And this was in October. So in October, we had the confirmation that the Baltic-Dry-Index, so the shipping rates more or less crashed. It was predicted. So we had confirmation that there seems to be a cycle in place. And this is really in advance to what happens in the global market. So this was the first sign. We should be really careful because the global shipping rates have crashed as predicted. So this is something, it's not just, oh, see what happened. We just follow our projections to see if they come into play. So this was in September, October. We have seen this happening. So now let's move into October. And this is what you also should do on your own. And start with a long-term analysis on the data you are interested in. Always know the long-term cycles before you drill down to your real trading or time frame you're interested in. So if we're here more talking about daily cycles, you need to understand what happens on the weekly time frame upfront, or see this as a trend. If you're just looking on the daily, the weekly give you kind of, if you're in an up cycle, down cycle, so uptrend or downtrend move. So this is what we did here back in October. That's October here. Maybe not the best picture from, don't care on that. But at least it's a good sign. I think today most analysts will look like that. But this was my face back in October. But anyway, not kidding here. The point I want to make here, and that's the important takeaway. This was the result of a weekly cycle analysis here we did in October. This is now the S&P 500, so the main markets. And we have detected 3 cycles. It's maybe not clear here, but 3 cycles which have been very, very significant during the last 20 years. So if you watch this video, I've picked these cycles because they had a real important influence during the past 20 years on major changes in trend in the markets. Yeah, and you see here what this cycle, long-term cycle predicted here. It's not as important to the day here, but you see now a long-term shift at the end of 2021, just before the start of 2020, and even into the year of 2024. So you're asking about the downside. The long-term cycles now project a really negative cyclic shift, which will not end yet, just had begun. Yeah. So, and if you're also new, because all of you now will ask, okay, when will the down drop now end? Cycles do not help us in detecting price projections. Maybe this is what Peter Eliadis is doing on cycles. He is using this to detect price targets. This here is in regards for timing information. So the long-term cyclic, and the shift here is important. The shift was here announced in October that we should expect a long-term shift in major cycles, which started mid-October. Yeah. With a very long duration. You can see it again on the chart, and please review this session to learn about long-term cycle analysis, because this was the chart I just did based on these cycles. It's just a different view on these cycles, but you see here what I just did, and this is just a recommendation you should do on your own on the data sets you are interested in. I've plotted the composite cycle here, which you see on the bottom of this chart, not as an overlay, just at the bottom. You can do this with the cycle analyzer on your own. And I've marked the phases of this cycle when the cycle is pointing downwards. I have just put a red overlay on the chart, and when the composite cycle is pointing upwards, I have marked it with a green color as an overlay on the chart. And then you can see how price behaved during these periods. So during the green periods, we always saw uptrending markets, and during the red periods, the best what we have seen have been sideways markets. So since October, we anyhow would expect now a long-term shift in the weekly sentiment, which has started in 2019 from this major low where the green phase started. It has ended in October. And please take your time to review this. We did this here together here as we're doing this now. So Baltic-Dry-Index, we had the confirmation. Yes, it turned down. Weekly long-term cycles. A shift in long-term cycle expectations. So we still had these huge positive sentiment in the markets, and I really had hard times discussing these projection with professional traders and fund managers, because they have been in a very euphoric sentiment phase. Oh, Lars, what are you telling here? Markets are really pointing upwards. Don't tell me anything. And you know that during October or the last 2 weeks of October, the price marched up. And I really had hard weeks there. They said, okay, these cycles will never play out. I mean, no, I think end of October, beginning of November, there was the peak here. But this, you've known this as a cycle analyst. You use this at this point of time, you adjust your risk management. I mean, this is nothing you can trade really on the markets, but if you see this, adjust your risk management. I mean, if you're long on the markets, do your stops there, hedge against what you should expect here. This is not going short immediately, but you have a picture of what you should expect, and you can adjust your risk management right ahead of time. And if this not happens, at least you have managed the risk. So now, but let's move forward. I mean, this was not anything, this was not the full story. Finally, we talked about the financial stress index. I love these measurements. This is the data set provided by, I think I repeated this here often on this channel, by the Federal Reserve Bank of St. Louis. This is a public data set. You can review it on the Fed website of Reserve Bank of St. Louis. They publish this weekly. It's a measurement of, I think, up to 10 different financial measurements, which is built into a composite. It's called financial stress because it measures a little bit the sentiment based on different measurements. And this is perfect for cycle analysis. So therefore, I regularly have a look at these kind of data sets. And we did this here back end of October. You have the videos there. What I just want to tell you here is about, this was the projection based on the financial stress index in October. And I think I repeated this analysis here also in November. And here again, the important point to make it, and this is why I often told maybe we need to wait also until the financial stress index turned. And this turn was projected, more November, December, if you have a close look at this projection here. So I think we did this in October. So we did this session here live here at this point in time. So this was the live session. And the low was projected here. So I told you anyhow, the financial stress index has 2 or 3 weeks to go until we see a cycle alignment between the long-term weekly cycles on the S&P and the long-term financial stress index. You see now we have seen they have not been exactly in sync because the weekly cycles already rolled over at this point. But then I showed you in 2 to 3 weeks from October here, and I think it pointed to November here, the low, we should expect then the financial stress cycle to join also the weekly cycles. And I mean, do you see this long-term projection, how really important this long-term cycle in the financial stress index was? If you just review the long-term peaks and bottoms here in the financial stress index, it pointed to a low. A low in financial stress is the top in the markets. We saw it in advance here. Last but not least, and now you drill down to your time frame you're interested in. So in this case, what we're doing here is daily analysis. So the last point in time is now we need to wait, or the simple way to say it, just wait now when you see these long-term cycles come into alignment, October, November. Now just wait until the main cycles of your lower or your trading time frame get into alignment. So this happened end of November, December, where the daily cycles in the global markets have been in sync, means they also projected now the top. Before that, and from time to time, I did the daily analysis here and I said, okay, the daily cycles are not in alignment with the long-term projections back in October, November, but in November and December, I've come to this channel here and I've talked to you, and this is the live projection we did here. This was November 22nd, where we did analyze the S&P daily cycles. You see here the main cycle, which was detected with a length of 171 days, which is a cycle I often talked about. And now this cycle projection, you see it here, right? I mean, that's the daily cycle projection done here, 22nd of November. And do you see what the top here was projected? I mean, you need to open the video for yourself, but I can read it. It was the 24th of December last year to expect the daily cycles to top. And I think, to be honest, this was more or less the top in the markets. So, end of November. So who needs to get into any panic mode? No one. So that's what you want to look out as a cycle analyst. And I just repeat the procedure because what I just repeated today is the procedure which you need to follow. This is the pattern you need to search for, to look out on any time frame. So if you're a day trader, if you and maybe you're trading intraday, you should analyze the 2-hour chart as your long-term chart and the daily chart as your long-term cycles, and then use your 20-minute or 5-minute chart as your trading chart, and then do the same procedure. You also need to have 1 or 2 correlated data sets, which you should look out that the cycles get into the same alignment, and then wait for the situation when the cycles align in terms of 2 related data sets and a long and short-term analysis. That's the time to act based on cycle analysis. And I mean, couldn't there be any better example than what happened during the last 6 months? I mean, we are doing this here for free, for education. This is what you can do on your own on any market and any data set. And last but not least, today we know what happened in the markets. So I think this was the last call, the gray one here. So this is where we did the daily final analysis in November here, right? So there I told you that the daily cycles seem to come into alignment on the 24th of December. I mean, this is a cycle projection, picture perfect. It couldn't be better. And in addition, before the 22nd of November, I told you that the long-term cycles confirm this projection here. And now we are 2 or 3 weeks after this projection. This is what you see. This is what happened in the market, right? I mean, we are now back to, yeah, I think we have broken, I think that we have crushed down more or less the whole last half year of last year anyhow. So no, even more. I think this was it. So, gentlemen, this is what cycle analysis is about. This is what you can do with the cycle analyzer you have at your fingertips. You don't need black box algorithms. You don't need 3,000 US dollar newsletter subscriptions from whomever. You can do this with basic knowledge how to do cycle analysis. The cycle analyzer is doing public knowledge. It's doing digital signal processing to detect the cycles. If you know how to use this information, this is what the outcome could be. I mean, you just need to transfer it into your own market trading action, but this is really different for anyone. So we cannot do any projection here on how to trade, but we can talk to you when to trade or when the times might be to act based on cycles. So therefore, this is, and I think really I just did it because it's about education. It's about the knowledge. How do I work with this kind of application cycle analyzer? I hope this session gave you a great not only summary how to look out for patterns in cycles within cycles. So also I think the last 3 months or 4 months have proven with a picture perfect example how you will be able to profit from this kind of analysis. I mean, the time effort, you don't need to spend your full day in analyzing newspapers, which anyhow just explain after the fact what has happened. Cycles show you what you could expect in the future, and you could use your time very relaxed to analyze, to see if different projections come into alignment. This is what Hearst has taught us anyhow years ago. Okay, please see this episode today as really a learning education example, how to look out. All the links down below in the video. Please, if you're new to this kind of analysis, or if you've joined the foundation during the last weeks or month, please take your time to review the analysis. We want to teach you that you are able to do this on your own. We are not here to do projections for you. We teach you how you do your own projections. We don't give you a fish, we teach you how to fish. That's the purpose of this channel here. And that's why we think this is important for everyone to have this knowledge here. That's the main topic for today. I will now do a quick update on Bitcoin, but just a quick one, because I see a question in the chat section. And then if you want, we can have a short discussion on your current questions, as I'm happy to discuss it with you. So Bitcoin, the meltdown in Bitcoin is also happening right now. If you have seen the projection we did on Bitcoin and the nominal 200-day cycle, I did an update early January in our financial review here. This cycle is currently pointing to a low, which, and that's important, what you need to know, we are in the phase of a possible low. In these phases, you never know the absolute price when the drop will end. So never catch a falling knife, and never, I've told you now for the last 30 minutes, just use one cycle projection on your own. So you need to confirm this long-term cycles with the different data sets, and for sure with the short-term sets. So watch out for confirmation of a possible low in Bitcoin crypto markets now, where we are in a window. A similar window which we've projected and summarized here for the end of last year, the possible top in the markets. We have now a possible window currently for a low in Bitcoin based on the 200-day nominal cycle. It's still valid. However, for sure, price could drop into this period. We don't do absolute price projections here. We are just doing timing projections. But in regards to timing, we are still in the period where a major low in Bitcoin could happen. But I promise I will update the crypto and Bitcoin analysis here during the next week on our monthly session. So I will do this for you. Just follow us weekly here in the Monday session. The downside in the S&P is a question. As often said, the cycles we are discussing here is not giving us a clear indication of price targets. The projections we're doing here are based on timing information. There are other methods you could do now in addition for price targets. So for example, we did a great session here with Peter Eliadis, and he is using for over 50 years, so he's really an expert on that. He is using cycles to project price targets. So he is using what Hurst called the future line of demarcation, which is kind of plotting an offset on the price. And if the offset line is broken, you can use this information to project the next a top or low from a price information. So now different cycle methods might come into alignment. So now we have the timing information. Now you can use different methods also for price projections. I mean, there are lots of other methods out there. You could use Fibonacci levels, you could use Elliott wave and other techniques which try to do then price projections here. But this is what we're doing here weekly, timing information. So I can't talk to you about the absolute movements here, but I will update you in regards to timing when we expect maybe a bottom to take place. But that's another story next Monday, next time, next session, next topic. So feel free to ask in Joan, Lars, do you think that tops and bottoms arrivals come in three ways, ascending, descending, and sideways form? Yeah, that's different. I think in regards to cycle analysis, the ways how important turns form are cycles within cycles. So, and that's the main topic, I think, what you always see in major alignments here. It's not just one cycle, it's different cycles that come into alignment. And that's what's the pattern is you should look out. And maybe that's a special topic, but if you're talking about technical patterns on the chart, like double tops or triangle on the chart patterns, all these patterns can be rebuilt based on cycle combinations. So chart patterns, which you see or which you use in technical analysis on the chart, could always be rebuilt based on cycles, but that's also a different story. Yeah, how long is the current downside projected to last? that's what I at least if you review the long-term forecast, which is still valid here. I don't know if this is the answer you want to hear, but it's a very bearish situation from the long-term cycles now. So from the long-term cycles, this period is to last longer than just a short correction, because we have shifted from the green phase where we just saw during the last 2 years, we just have seen short corrections and then the next high, the next high, the next high. That's based on the long-term cycles have been in this green mode. So now until 2023, 2024, we are in this red stage where the 3 dominant long-term cycles still pointing down. For sure, we can have upswings and we will have upswings as Elliott wave patterns anyhow project, but the major period is longer. Samuel, I think this related to your questions. Eric, yeah, for a major bottom in Bitcoin, the weekly cycles and the daily cycles have to be in alignment. Yes, this is what we should look out on the chart. And this is what I would recommend to you to look out on the chart. And not only Bitcoin, as I said, or what I showed today, the pattern is I've not only looked on the S&P, I've looked to financial stress, I've looked to Baltic-Dry. So you should also ask yourself, and I cannot give you every answer here on this channel. So therefore, please ask yourself, what could be a correlated data set you also want to look at if you are interested in trading Bitcoin? So maybe Ethereum or other cryptos, maybe seasonality and cycles. So think about what's the relation in cryptos. Currently, we have a relation to tech stocks. So you know that NVIDIA or graphic cards or graphic chips, which are used for mining in crypto. So this is a correlation I used some years ago. I don't know if it works today, but years ago, you could use the correlation with the NVIDIA stock, because this is a major dependency to mine a crypto, where cycles in the NVIDIA stock market and Bitcoin had a great relation, and you just needed to wait until they have come in sync. So I'm not up to date if this works now. I just want to make the idea clear so that you need to think a little bit around the corner. What are related data sets if you're interested in Bitcoin? And yeah, for today, it's anyhow, they are really related to the tech stock market. That's also why I think the meltdown is a little bit in sync, but it does not mean they have the same cycles here. Eric, as far as my analysis is correct, the weekly cycles are still down for a longer time. Yes, and yeah, I think now you're on the right path, on the right topic I wanted to bring across in today's session on cycles. Please review the videos I've linked down below if you want to learn something more, how we did this, how you can do this in advance. I try to bring in some comments. Maybe they inspire you a little bit on your own discovery on cycles. And next word onwards, for sure, we will have a fresh look on timing. When will a low maybe happen? Global markets, crypto, these are the 2 ones we are interested in. So thanks for joining me today again here on the channel. Please do us a favor if you like the channel, if you subscribe to the channel, if you recommend the channel to your friends and colleagues. This will really help the foundation, growing the audience, which is our main interest here, because this is a free education we want to bring out. So do us a favor, recommend the channel, and join me next week, Monday, same time, same place. This is also the chance to ask questions, because I'm happy to get into the live discussion with you. So feel free to drop in your questions in the live section. Thanks for today. See you next week. Stay safe. Have a nice week. Be careful in the markets. Bye.